going to need the market to reprice to an even higher path for short-term interest rates. And whether or not that happens, I think will in part depend on the guidance that comes out of Governor Ueda. But but to Brian's point, and this is where I get to agree with Brian. We do think that the lion's share of the movement in dollar yen is going to come from the U.S. side,
right.
And so it remains to be seen how that plays out.
You guys are allowed to agree on this program. We love a little bit of agreement, but also some healthy disagreement too, because that's what makes the market. But maybe that's my part to play. Brian, on this idea that the market has already been pricing in a continuation of rate policy, it has been well telegraphed, at least from media reports and from what we've heard from BOJ policymakers looking at wages, that they want to start normalizing policy at some point. If it is well telegraphed, what does that mean for the repatriation of Japanese investors moving out of treasuries and into Japanese assets? Is that type of movement lessened by the fact that it has been so well telegraphed?
No, I don't think so. I mean, this has been in the, it may be telegraphed, but this is something that hasn't happened in so long. So it is a shift. The fact that you're seeing higher nominal growth in that part of the world for the first time in decades is a shift. And I would still expect to see markets move as a result of it.
And what about the stock market, Matt? I mean, we've seen huge gains, near records. Does it make a difference if Japan starts to normalize? Can the gains continue?
Well, yeah, I mean, and this holds a special place in my heart because that's where I started my career at Morgan Stanley is in our Tokyo office. And, the Nikkei was substantially below its 40,000 highs from the 80s. And now we're back. So I do think that the equity market is a story to focus on. It's not clear to me that 25 or 50 basis points higher in short-term interest rates is going to derail the trend in the equity complex in Japan. But what I do think is interesting is the interplay between dollar yen, the currency pair we were just talking about, and the Nikkei 225 or the Topics index for that matter, and kind of the relationship that those two assets play with one another, because at the end of the day, the people that are buying the Nikkei at this point are largely from overseas locations, and not all of those investors want to take that currency risk. So we do see this feedback loop between higher Nikkei 225 and higher dollar yen, which, by the way, is another factor that I do think has helped keep the yen weaker than maybe you might have otherwise expected, Danny.
Matt, I'm so happy we were able to give you a throwback to your days in Japan, to your starting days at Morgan Stanley. What a lovely way to end it. Matt, Brian, we're going to have to end it there. Matt Hornbach and Brian Levitt, thank you so much. All right, just